Welcome to Trade of the Week. With me, Zinati Kuma. This week, Standard Bank, Remgro and Truworths are up for analysis. Founder of Herenya Capital, Petri Redelinghuys, joins us now with his take of the stocks. Thank you so much for your time, Petri. Before we get into the technicals, I love picking your brain. And so today is the day before what the Trump administration is calling Liberation Day. And that is when the Trump tariffs come into effect. And they said on the 3rd of April, they start collecting. How are you feeling ahead of that?
Look, so I think the market will probably get a bit of a fright.
Which has been the case.
So, you know, we talk a lot about roadmaps and expectations, and expectations are not so great always because sometimes they're not fulfilled, but roadmaps are a good thing. I like to work with them. What do I think is going to happen over the next 12 months, right? And the roadmap that we've sort of had at this stage is that we start seeing interest rate cuts. It takes a little while for the market to realize that, oh, this is actually bad news.
Yes.
And then, you know, in comes recession. This has been the case for the last 200 years. It's not going to be different this time. And the world will blame Trump. Well, now we have our reason to blame Trump. I mean, the market's already down 10%
something
from
to
the
cry
highs.
about.
If you look at the S&P 500, initially the news, Trump wins, market really rallies off the back of that. Everybody's happy. Interest rate cuts. Oh, yes, everybody's happy.
Yeah.
Champagne bottles are popping. And eventually the market's now down 10% from the highs.
Yeah.
So that euphoria is kind of over, essentially.
Yeah.
So a good, healthy bull market correction is up to 20% down. Beyond that, you start being in bear market territory, depending on your definition of how you define a bear market. But fairly soon, I think we're going to start seeing CNBC and all the other channels. There's one in particular, I think it's CNBC, when they start running the markets are in a panic, then you know it's time to buy, right?
Kramer starts coming.
Yeah, Kramer starts saying, that's the end, then you buy, right? So that's exactly what I think we start seeing happening in the next couple of days. I think Liberation Day is, look, I don't understand why people are so surprised. The guy said, I'm going to do these things if you vote for me. They voted for him, and he's doing these things, right? So he's actually one of very few people in the political realm that keeps his word. So how the market will respond? Probably negatively. How the world will respond, probably with immense amount of shock in the beginning, and then negotiations will start. We've spoken about this before. The strategy that he plays a very strong hand, and as soon as you say, all right, let's negotiate, they'll negotiate on fair terms, right?
Yeah.
And I think that he did that with Canada, he did it with a couple of other places.
Mexico,
he's basically said that to Russia as well, like, look, either we come to a deal or you regret it.
He's even negotiating with the UK Prime Minister as well.
Exactly, right? This is what this guy does. So I think what we probably see is that these tariffs go in place, and they start getting paid, and very shortly after, those who are affected by the tariffs, us included, will start to say, all right, well, how do we get back on favorable terms with the US? And a more fair deal will be struck. So in the very short term, I think this is a beautiful catalyst for the beginning of a bear market.
Where you could find opportunities?
Where I also want to just reiterate, and I say this every time, if the market falls 20% or more, it is the opportunity of a lifetime. People panic, people scream and cry, and all my pension, all the rest.
Yeah.
I think about buy more stocks because it is the greatest opportunity you're ever going to have. Look at COVID, look at the 2008 global financial crisis. Even a couple of years ago, we had a 20% correction, and we all panicked during that time. Post-COVID, in the last 2 years, we had a 20% correction. Everybody panics, but at the end of the day, over a long enough time horizon, you look 10 years down the line, you can hardly notice the little blip that was the 2008 global financial crisis.
Yeah.
So just use the opportunity to buy more stock. Keep investing. Don't let it scare you out of the market.
It's quite interesting because there's been a lot of panic in the US markets, understandably so. And then we also saw the Nikkei and the Hang Seng all going into correction territory. So there's really a lot of panic. But quite interestingly, the JSE has not been in a panic. It's been trading at record highs.
Yes, it has. And again, this is a little bit of a theme that we spoke about, the roadmap, how emerging markets, that balance, that sort of multi-generational shift of power from west to east, right? And we're more aligned with BRICS. So emerging markets, China, and other emerging markets become more attractive because the Western markets will come under a bit of pressure, and we can see our market is catching up. I think we even did it on the show where we looked at the performance differential between the S&P 500 and the top 40 index over 5 years and over 10 years, and we see that there's that massive gap that needs to be filled. So we probably continue to outperform, aka go up. while the US pulls back. So good time for South African investors.
Yeah. All right. Well, let's start off with Standard Bank on your technical analysis today. One that actually has continued to outperform. It's now even closing in on First Rand as the most valuable bank on the JSE.
Yeah, so, I mean, you could actually just say banks in general.
Yes.
But what I like about Standard Bank, and we're going to look at a couple of different charts here, so if you don't mind just showing those. Standard Bank is sort of trading in a nice little upward channel. Okay, I put some channel lines in here. It hasn't exactly stuck to those channel lines perfectly. It pops out the top every now and then. But essentially, we're back on this. And if we look at what happened with gold, I'm just going to go to gold as an example.
All right, all right.
Similar in any way. It's basically just for sake of example.
Yeah, that's another one that's just not letting up. It's just hitting record after record high.
So if you look at gold, sometimes you have this channel line that trades up and it breaks out the top of the channel and you just have this parabolic move, 31.30. Wow, right? Anyway, so Standard Bank, I think, is at this stage where we've tracked this channel for a while. We're breaking out the top of the channel. This might act as support and we could see a bit of a much stronger move. Two, it is seemingly one of the stronger ones in the bunch. Yes, today is up the least. I guess it's up, well, not the least, it's up 85 basis points. Capitec is only up 50 basis points. But if you look at First Rand, sort of First Rand's kind of coming out of the bottom, potentially trying to put a trend change in. Absa Bank has got a higher risk-reward ratio. You could buy it off the support level. You could buy it off this trend line. So this is also a very good buy, actually, for shorter-term traders.
Okay.
Capitec, not looking too bad either. The trend is quite strong, trading near the highs. Standard Bank, however, feels like the one that is a bit more favorable to us just because we have this sort of potential support level. So we've got a very nice risk-reward set up here for a new long trade. So truthfully, yes, I'm saying Standard Bank, but you could probably buy any of the banks.
Okay.
I think that's going to look good. So some of the reasons why, yes, lowering interest rates does put margin pressure on them because they're paying out interest and earning interest and lowering interest rates.
So their margins are
coming under a bit of pressure.
Yes.
But what I think happens is we see a lot of positive sentiment shift and we see an improvement in the property market and that a lot of people with lower interest rates that couldn't get home loans can get home loans now.
And they're actually quite dominant in that home loan space as well.
So that is maybe margin compression, but lots of new business.
Yeah.
Right? And I see that interest rates continue to come down. And I think that also there's a bit of a trend, people moving out of Cape Town back to Joburg, from other countries back to South Africa. Africa is a cool place.
Yeah.
And I think property prices will probably go up for the next couple of years. And that's going to mean more deals for the likes of the home loan teams and higher revenue for the banks.
All right. Very, very interesting there. And of course, we know about the leadership changes there. Wishing Kenny Fihla all the best in his new position as the CEO of Absa. And we'll, of course, see how the fundamentals maybe shift between a Standard Bank and Absa in that regard. Let's go on to Remgro, one that has a lot of companies under its wing. Recently came out with numbers and actually it was looking better than the previous comparable period, even though CIVH, where we are still waiting for a deal, the massive deal between that CIVH and Vodacom to come through, but seeming that overall Remgro is on solid footing. What are the technicals saying?
Should we call them a diversified industrial?
Okay, yeah, like that.
Okay, so we're going to look at a couple of charts here. I think we've looked at this in the past. So I've got a couple of annotations here, nice little marks. Is every time it's hit this resistance line.
Okay.
And essentially what I think is, it's going to only hit this resistance line so many times before it breaks. Now, if you squint your eyes just right, you'll see there's an inverse head and shoulders pattern there.
Okay, I see it.
So I can even draw that in for you. So there's your shoulder, there's your head,
okay.
There's another shoulder, and there's that.
This would be a great advert for Head and Shoulders.
Yeah, there you go. So inverse head and shoulders, quite a bullish pattern. I think that this time around we break this resistance level at 162. I mean, technically we are trading above it now, so we just need to close where we are. It has done it in the past, so don't get sucked in. But what we have here is a very nice high risk reward trade. Yeah. We've got a long-term trend line that's busy sloping up. We've got this long-term trend. You can see this long-term trend line. It's basically a 200-day, in this case a 200-week moving average. That's really sort of been a very strong trend indicator. So we are trending up at this stage again, according to the moving average at least. We have the significant resistance level that might be breaking. I think is busy breaking. And if you take other factors into account, like we're very bullish South Africa versus the rest of the world.
Yes.
I think, and a couple of other fundamental drivers, as you mentioned. I think that we have a great entry here, and you could probably put a stop loss sort of around 135. It's a long way down, right?
Yes.
But you potentially have a very long-term trend. So this is the kind of trade you might want to do on equity rather than CFD, because you don't want to be paying funding rate on this for the next 3 years as the stock price doubles.
Well, does the end of that head and shoulders signal a kind of trend change to the upside?
Yeah, so you can argue a couple of things for the, so we can target this head and shoulders, just to do that. So that would be your target price, 201.
Okay.
On your head and shoulders, right? So if that does play out, then you absolutely have a trend change scenario. So the simplest way to look at how to determine trends is really just higher highs, higher lows. Good old-fashioned Dow theory. It's been around since, you know, the Wall Street Journal or whatever.
Yes.
So what we have here is a low point, a high point, another low point, another high point. So we have basically higher highs, higher lows. It's an uptrend, right? So here we had lower highs, lower lows, all the way down. That has now changed. We made a higher high, we made a higher low. We're busy making another higher high. So if we push to here, then that confirms an uptrend. And then, you know, this head and shoulders pattern has been reached. We might see a bit of a pullback, but as we can see, trends are squiggly lines and not straight lines. So for me, this is the beginning of a new uptrend. This is just a confirmation of, and a little nice technical entry point to get onto a trend that you might want to be in for the next, you know, 3 to 5 years.
All right. Interestingly, you're also looking at retailer Truworths. I actually don't know what to make of the South African consumer at this point.
Look, it's not. Yeah, I don't know. It's a tricky thing. I think if everything else I said was correct, which it could not be, right? I mean, I could absolutely be have the wrong end of the stick.
Yeah.
Absolutely, right? But if some of the base assumptions that we have are correct, that, you know, things go better in South Africa, the property market improves, you know, lower interest rates, you know, the GNU manages to stay intact, and all the other, you know, political stuff that's happening.
And maybe VAT doesn't really hurt us too much.
0.5% increase isn't going to be that bad.
Yeah.
Right? So if all of these things kind of play out, I think that in general our economy improves. I think in general employment improves. I think in general the, you know, general broader economy gets better. And if that's the case, then clothing retailers are going to do well as well. One thing we can say about, you know, the likes of Truworths and Fashini and those guys is credit retailers, maybe not the greatest thing, just because I'm not a big fan of debt in general.
But they
do well.
Yeah, they do well.
They do well. They make money because they get interest as well, right?
Yeah.
On a lot of that stuff, and they also have, you know, other financial services products attached to it, like loans, personal loans, unsecured loans, and that kind of stuff. So yes, okay. Now, we have a situation where on a daily chart, I'll switch to weekly first because that's where our bigger trend is determined. So weekly chart, the weekly trend here, according to our moving average, is still up. And we have this big correction down to what seems to be really quite a significant support level. So what I'm going to do, instead of drawing a flat sort of line and saying this is the absolute level for support, I'm going to give it this big fancy box.
Okay.
Right? And say that is a zone of support, or an area in which you're happy to buy. So on a weekly chart from 2020 to now, we have an uptrend. Yes, we've had a steep correction, but it's not the first steep correction we've had, right? So we've had a nice little steep correction into this buying zone to try and buy it off of that longer term weekly 200-week moving average, right?
Okay.
So on a shorter term time frame in the daily space, if ever it loads, okay. It looks a bit different. We're kind of doing a mean reversion trade, so we're trading back to this moving average, right? So it feels a lot scarier, but if we use the weekly trend as our backwind, then we should be fine. And this is nicely in the buying zone, and we think that, you know, this is a good opportunity to get into something that's really corrected massively. I mean, if we measure this move from 112-ish down to 172, let's be conservative and say 74, right? Yeah. That's 34%. It's massive, right?
Yeah.
So we think that if this trend continues, first you recover that 34%, and you make a new high, right? So you could, within the next couple of months, it's hard to make forecasts, and also, you know, I don't want to hold myself to it. Anything can happen, but you could do really well on this trade.
It's fine. We know
if you're patient enough to, I mean, it's made of glass, not made of crystal. But if you, you know, you could probably do really well on this trade. Again, this is maybe the kind of trade that you could do it leveraged with the CFD and take some gearing to it.
Okay.
But if you intend to be in this trade for 3 or 4 months, that funding rate might hurt. Look, 35% return, leveraged versus, say a CFD swap rate of 10%.
Yeah.
You're still making massive
Okay.
amounts of profit. But if you want to hold it for longer, consider an equity. If you're happy to sell it by the end of the year, CFD might be good.
Okay, so we are already in that box, so meaning that it's still a good time now, and maybe you can buy lower.
Essentially, disclaimer hat on,
Yes.
it might come a bit lower to the bottom of this box.
Yes, what happens then? What do you do?
If it breaks out the bottom of this box, so let's say that this support level does not hold. Let's say it breaks below 60.
Yes.
Then, run for the hills.
Okay.
But if it remains in this box, finds a bit of support in here, you can probably expand this box slightly bigger as well to say 60, right?
Okay.
So if it breaks below 60, maybe we've got the wrong end of the stick and you take your loss, and okay, you lose 13 Rand a share or 14 Rand a share. It's a bit of a pakslaw. It's not a pleasant time. But if we remain in this box, so the lower it goes, the more aggressive I'd be buying. So depending on your strategy, maybe you can place a bid in the middle of the box or the bottom of the box, or buy 5% of your position today, 5% tomorrow, depending on the size that you trade. If you trade really big, you might stage in over time. If you're trading like normal sizes, you can maybe just take a small position here. Looking to add the other half, sort of at around 66 if it gets that low. Alternatively, so it all depends. If you have questions on how to really trade it, depending on your account size, give us a call. We can help you, right? But beyond that, anywhere inside this box is a good place to buy. Below this box, below 60 Rand is probably a good place to stop out, and your target would be sort of 112 at least, right? If you get to 112, offload half the position, and then allow the trade to run from there for the rest of the year.
All right. Yeah, very, very good trading opportunities there on the JSE. And of course, we have seen people moving out of US stocks. So maybe just put in some money on the JSE. Thank you so much for your time and for your analysis today, Petri. That was Herenya Capital's Petri Redelinghuys. And that is all for this week's segment. But do stay tuned for lots more coming up right here on Business Day TV.